From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 25th, 2017. Today we're going to be taking a look at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. But first, it's important for me to remind you that we do have several pieces of news that could affect the US dollar today, coming up at 8:30 a.m. Eastern US time. Core durable goods orders news being released, and that could have an impact on the US dollar. And a couple of other things to think about today is the Jackson Hole Symposium. Fed Chair Yellen scheduled to speak at 12 p.m. or noon Eastern US time. That could have an impact on the US dollar. And later on, ECB president scheduled to speak at 3 p.m. Eastern US time. So several things that could impact the US dollar today, could impact the analysis that we're doing right now. Let's go ahead and get started here on the daily time frame. The first thing I want to point out, of course, is the uptrend. The blue trend line, not too hard to see that. It has been in an uptrend for several months, going all the way back into May of this year. In the past several weeks, though, we've seen a little bit of a pullback where it made the high all the way up here into the mid 8,000s, the blue shaded area at the top of the chart. The green trend line showing that pullback down into the blue trend line. It found some support down here into the low 7,800s, bounced back up and sitting now above the support at 7,885, 7,900. We have seen this support before. Let's go ahead and zoom it in on this orange shaded area. If we look at this orange shaded area, I'm just going to draw out a circle real quick so I can point a few things out to you. Not only right here in the current time, but we go back here and we see a lot of resistance and support in this period. This is the daily time frame, remember. So we have 1, 2, 3, 4 days support, 3 days resistance. We look back here on the left hand side, 1, 2, 3, 4, 5, 6 days of support. So we have seen a lot of price action around this orange shaded area, and not just in the past 4 days, but historically over the past several months, going back into July. So we know that there's that higher impact area, 7,900. As long as it's above it, history tells us there's potential support and for the market to turn back higher. Interesting enough, again, is that we're sitting above the blue trend line. Only if it gets under this orange shaded area in the blue trend line do we expect it to go lower. So right now, sitting above it, there's this higher expectation that we could at least look for it back to the pink zone. Again, looking back to the left, you can see that's what happened. Support at the orange zone, resistance at the pink zone. Support at the orange zone, resistance at the pink zone. Support at the orange zone, resistance at the pink zone. So again, historically speaking, that's the facts. That's exactly what the market did. Found support at 7,900, bounced back to the pink zone one time, even pushing as high as the blue shaded area. And only really in one time in the history here has it pushed through the orange zone and went back down to the yellow zone as the next support. So we know where the market's been making its trading decisions to buy, sell, enter, and exit. So it becomes an area where we could look for those trading decisions as well. Past 3 days have held support here pretty easily, dipping a little bit lower and then coming right back up into the orange zone, and now we're sitting just above 79.05. So it would be my expectation today, given the news, of course, later on as we go throughout our day, that as long as it sits above the orange zone, this is more likely a buy scenario. In the trade room, we've been talking about looking for the break of the orange zone. Let's take it down to the 4-hour time frame and take a look at this viewpoint on the 4-hour, how the market's just been stuck in a period of congestion here on the 4-hour time frame. 78.85, 79.05 is the top and bottom of that orange zone. It's just been stuck. And we've been talking about looking for a breakout of this orange zone. Now, this was a false breakout. You can see the big wick sticking down here underneath. The market got down. Probably a large red candle fooled some people into thinking this is it, let's go short, and then suddenly it pulled right back up into the orange zone. So we don't want to fall prey to a false breakout. So how do we do that? Well, typically we're looking for an open and close above or below a resistance or support level. So that's what I'm waiting on. I'm actually waiting for this little guy right here to close, then maybe a dip back down to improve our risk reward back down towards the 7,900 level. Our risk is, of course, a break underneath it at this point. You know, let's watch that news, that durable goods orders news coming up at 8:30. If it's positive for the U.S., it's possible we see the market dip back into the orange zone, or maybe even if it's strong enough, push back underneath the orange zone. If it's a negative piece of data for the U.S., I'm definitely watching for that opportunity to go long on the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.